Ladies and gentlemen, Tesla stock investors from all walks of life, we are going to discuss something that is critically important for Tesla stock here in this video, and it is the big catalyst coming out on Thursday, which is delivery numbers. Now, let's all be honest. Deliveries are going to become less important to Tesla in 2025. They will still be important, but they will become less important. Now, tomorrow's delivery number, I think, is very important, like critically important, hence the title of this video. I will share with you my expectations for this delivery number and why Tesla could be set up better now heading into that, good or bad. Okay, and it really has to do with Tesla falling from 488 down to 416 or so. In just the last 2 weeks, it does set us up for what could be a larger rally afterwards. So, we have a lot to get into here in this video. I will also discuss, generally speaking, what I'm noticing with markets here and how this could play into 2025. Where you may want to be positioned, where you may want to stay away from, and what could be a real winner next year. Tesla, obviously, but other areas as well. In fact, you can actually see 10-year treasury yields come down a bit in the first couple of months of 2025, and that could be positive for certain areas. Tesla, yes, small caps, cyclicals, and value names, and I will discuss all of that with you here in this video. So, the work is cut out for us in this one. Hit that like button as well as subscribe to the channel if you have not done so already, and thank you guys for supporting the channel. Just remember, these videos are not financial advice. This is not a personalized video for your situation with Tesla. Everyone's situation is different. I never would tell you to gamble or speculate in the short term. Investing is always risky, and you could lose all of your money, especially if you trade something like options. Like, just because I'm bullish does not mean you go YOLO your portfolio in options expiring in 2 weeks, okay? You're going to lose all your money. Be smart, make a wise financial decision for your family. Okay, disclaimer out the way. Let's get into what's really important here, and that is Tesla's delivery number on Thursday. Now, I think it's pretty much common sense. Tesla's in a better position now than it was, December 19th, December 20th, as the stock was in the 480s, okay? Just simply put, you've reset some of the momentum in Tesla. Now, is the momentum gone? Absolutely not. Is Tesla still alive and well? Is the bull case still alive and well? Of course. And in fact, I'm actually impressed that Tesla has held up so well, considering the markets are destroyed, okay? Internally, markets are in a full-blown correction. Now, depends what you're looking at, of course, but if you look at something like the RSP is down almost 8% from all-time highs. That is the average stock in the S&P. So once you start to move like a standard deviation in the quality spectrum lower, right, to like one standard deviation lower quality in the S&P, you're down like 20%, 30% from all-time highs, okay? Tesla, only down 13% from all-time highs. Tesla is obviously very high quality, but it does have a very high beta, okay? So, I mean, if the RSP is down 8%, most stocks are down like 10%, let's call it, from all-time highs. Tesla only down 13% is truly impressive. Like in the 2-to-1 beta that Tesla currently usually runs, at least, Tesla should be down like 20% from all-time highs. You're not, okay? So from that perspective, Tesla has been impressive. Now, also, you've seen a lot of gains in Tesla in a very short amount of time, okay? Since the election, Tesla stock is up like 75%. You would expect, if the story for Tesla was changing, Tesla would lose like half of that or more. Okay, it's no thing to see Tesla fall 50%. Okay, it's happened multiple times, many times in Tesla's history. Okay, going back to 2012 or so when they IPO'd, 2011 I believe Tesla actually IPO'd. Nonetheless, that's the point, right? Tesla has done well. Now, there has been pressure on generalized markets over the past couple of weeks. I think this has to do tactically with tax loss harvesting. I think you've seen a lot of pressure in the equal weight S&P, in small caps, in value, in cyclicals, in stocks that have not done well this year. Like, the losers have just gotten destroyed even more. Because what hedge funds and institutions do, okay, is they say, take something like a Walgreens for an example. Easy stock that I can pick on. Okay, stock has not been doing well. Say that stock was trading like $11, $12 a couple months ago. Some hedge fund managers are going to say, okay, how bad or how much worse can Walgreens get? It was already down like 50% at that point for the year. They say, okay, I'll take a position over the next couple of months, right? They probably did that in the summer. They say, I'll take a position in this stock because is it going to fall a lot more? It could, but it could also go up a lot, right? You could see that end of the year rally for those kind of names. A bounce back for something like Walgreens that is super beaten down would not be super shocking. Okay, just a little bit of good news, things go right, and boom, you got a double up in Walgreens. Okay, that did not happen. So as you get into the end of the year, hedge funds, institutions are like, yeah, I don't want to own Walgreens like in 2025, so I'm just gonna take my loss, take my tax loss harvest, and GTFO out of that stock. Okay. That's kind of the narrative. And then once you get into 2025 again, it's like, hey, could Walgreens recover in 2025? Perhaps. Is the worst behind it? Maybe. Personally, again, I don't know. The stock's down like 65% this year. But then hedge funds and institutions might say, okay, maybe Walgreens looks good for a recovery play in 2025. And they kind of do the same thing, okay? So that's some of the seasonals that have been affecting markets. If you're a stock and you're down on the year, there's just been a lot of that tax loss harvesting into the end of the year, okay? Not for Tesla, but really just for generalized markets. Now, 80% of volume of trading activity is done by algorithms. So when you're seeing a lot of tax loss harvesting, it tends to kind of put pressure on everything. The other side of markets recently is, yes, you did have that surprise, if you will, from Fed Jerome Powell, but really, was it a surprise? I mean, 10-year Treasury yields had kind of been telling us for a while that we're not going to be getting as many cuts as we expect next year. Okay, so I don't think it was that big of a surprise. And you had Fed officials like Fed Goolsbee kind of walk a lot of Powell's comments back. Okay, so yeah, Powell kind of changed things up on us a little bit, but did they really? Not really. Okay, I think that was more or less an excuse to take some profits into year end. You've seen stocks like Nvidia. You've seen Palantir. Okay. Some of the best performers on the NASDAQ. I believe Palantir is the best performer in the S&P, in the NASDAQ this year. Okay, what's happening to that stock? Let's just pull up Palantir. Stock's down 0.5% today. It was at $84, almost $85 at the all-time high. Again, today it's down to $76. Not a huge decline, but you're down almost 10% in that stock. Did people get bearish for Palantir? Did the story change? I don't think so. The only difference is I think you are seeing some profit taking in the markets as kind of a generalized statement. The stocks that have done the best are especially getting, some profit taking activity. So mixed tax loss harvesting, which is really targeting the worst of the worst stocks that have done the worst, that are seeing the tax loss harvesting. And then imagine the stocks that have done the best are also getting sold because they've done so well and hedge funds, institutions are booking a profit. Okay, so that's kind of what has been affecting markets in December here. Okay, Tesla's done very well despite all of that. Okay, so I'm actually impressed with Tesla from that standpoint. Now, imagine 2025 when we roll over from calendar year 2024 to 2025. Mike Santoli on CNBC was talking about this today. Like, he thinks this is really just all end of the year tax loss harvesting and profit taking. That, a calendar year shouldn't, in theory, matter so much to portfolio managers, but it does. So as we get into 2025, you're going to see a redeployment, a repositioning of capital. And that's why I'm so bullish on Tesla in January and really throughout all of 2025. As long as nothing goes wrong, as long as we don't have the Fed that needs to raise rates, or we don't have a recession, or FSD does not, fail, or something really negative happens, then the stage is set for a pretty crazy good year for Tesla next year. Okay, so I think you're going to see a lot of positioning into Tesla in January. Okay, especially if Tesla has a good delivery number on Thursday. That's going to be the big catalyst, I think, to push Tesla higher, at least in the near term. As I have explained here on this channel, I think Tesla's base case for deliveries is around 535. That's my expectation, 535. Plus or minus 5,000 wouldn't surprise me. We come in at 540, great. We come in at 530, 530,000, great. Would I be shocked in that? No. I get a little bit more surprised if we come in, lower than that or even higher than that, with a, best case scenario around 575,000 deliveries if you've seen some real strength in the US, and worst case scenario at about 485,000 deliveries. But really, between 510 and like 540 is really where we're going to end up landing. I just think it's closer to about 535, could be about 530. Does not matter too much. With Tesla stock that has fallen this much, Tesla even coming in at 510,000 deliveries, meeting consensus. It's not a bad number, right? Let's say it just meets consensus, is probably enough to push the stock higher. But a beat here would be very welcoming news for Tesla stock investors. Now, we also had some new news today that the China Megapack factory is starting trial production this week. It's going to have initial capacity of 10,000 units a year. So coming next year, that is going to double Tesla's energy generation and storage business. Okay. Elon has said many times there's basically unlimited demand for that business. So it looks like that's really going unnoticed in Tesla. Again, tax loss harvesting, profit taking, it's kind of just the driving factor right now in markets. But the interesting thing is, again, when we start Thursday, it is going to be January 2nd, Thursday, right? Let's just, January 2nd, right? First trading day of 2025. Tesla delivery numbers come out. If that thing is good, we're going to be off to the races, because you no longer have that end of the year profit taking. Could you see profit taking that extends into January? I guess, but stocks are already so beaten down. Sentiment is already so negative. I think a lot of that has already been done. There will be no more tax loss harvesting. I think that sets the stage for a strong January into the inauguration. Now mix that with not much for economic data, an earnings season that doesn't kick off again with the banks until January 15th. And we could be in for a bit of a sweet spot for that January effect. Now, I've talked about the January effect here on this channel multiple times before, but the January effect is when stocks just tend to go up in January. A lot of it has to do with tax loss harvesting. At least some people think. It says here, Investopedia, the January effect is the supposed seasonal tendency for stocks to rise in the first month of the year. The January effect is said to occur when investors sell losing stocks in December for tax loss harvesting and repurchase them after the new year. Like other market anomalies and calendar effects where sentiment and non-rational motives appear at work, the January effect is considered by some as evidence against the efficient market hypothesis. Okay. Yeah, markets are not efficient at all. I don't know who ever said that, but very much not efficient, especially when you get into like small caps and value and cyclicals, some stocks that people just don't monitor much. That's where you get like diamonds in the rough, right? A stock with a $500 million market cap could really be like a $10 billion company, but you have like one or two analysts covering it and just things go unnoticed all the time in small caps. That's why there can be so much upside in successful small cap companies. Now, not to deviate too much here, but again, the areas that are being tax loss harvested are the clear cut best winners for next year. They are some of your AI appliers, okay? A MongoDB, great company, had fantastic earnings a couple of weeks ago, like beat across the board. That's a stock that I personally started buying recently. It's one of the biggest losers on the S&P this year, okay? It's down a lot. It looks nasty, okay? Tax loss harvesting. Again, there's so many stocks you can point to here, but some of those are going to be potentially the best areas to be in 2025. And I think that's why you're going to see a very pronounced January effect. You're going to see a lot of rebuying into these positions that people have, downsized their position in for tax loss harvesting reasons. And again, big tech is the reason for this. Big tech, there's so much gains in big tech. You pretty much have to tax loss harvest something, right? Or your clients are going to have a lot of tax obligations. Imagine it like this, okay? You got a portfolio right now. You're a hedge fund manager, okay? And you're up, we'll call it 30% for the year. Great. You beat the S&P, fine. You have some stocks that are big winners, some stocks that are big losers, okay? You're up 30% on the year no matter what, okay? Your clients are going to have a big tax bill. Instead of giving them a big tax bill, you can tax loss harvest Walgreens. You could tax loss harvest Dollar General. You could tax loss harvest, all of these other areas, your small caps, right? All of that. It doesn't change your P&L. Okay, you're still up 30% for the year. Congratulations. Your clients are very happy. But instead, you sold those losing stocks. So now they pay less in taxes. So it doesn't hurt your P&L. You're at the same place, but just your clients pay less in taxes. And that is why tax loss harvesting is so beneficial to hedge fund managers. And I think that's why it's been so standout this year, because you are coming off of such strong gains for the headline S&P and for big tech. Now, some of the selling that we've seen today for big tech, some of the depositioning in big tech that we've seen today was also pretty pronounced, okay? All of your big tech stocks really sold off, with something like Nvidia that sold off like over 2% today. Now, I think this is really just a sign of what to expect next year. That's why I said in January in previous videos, I think there is some risk to the headline S&P. And I know that sounds crazy. You could see a broader market rally, but the S&P and the Nasdaq actually not do as well. Like lag small caps, they could lag the Dow, right? The RSP could outperform a lot, okay? That's because big tech, do you really want to be in big tech next year? The only big tech stock that I really like is obviously Tesla. You could throw maybe an Amazon in there, but there's not a strong reason to own big tech at this point. And that's why I think you've seen big tech sell off more than the S&P today. I think some people are getting ahead of that and reducing exposure to big tech before everyone else has the same idea in 2025. Now, again, as I have said in previous videos, if you are in a bull market, which last I checked we are, if I really sit back and take a third-party perspective and take the emotional aspect out of markets, I highly advise you guys, nothing on this channel is ever financial advice, but this is financial advice / recommendation. Whenever you are, super bullish or super bearish, or really any time, you always want to literally sit back if you have to. Sit back and think. Okay, this is what a lot of people do not do. I've realized this as I've, when it came into adulthood, is people do not think. Okay, in life, in investing, people do not think. And especially people do not think without emotions. Now that's one difference between like guys and girls, okay? Girls tend to have, very, very good qualities like being able to multitask and all of these things. They tend to be emotional. Well, guys don't tend to be as emotional in like real life, right? With decisions, we tend to be level-headed and we tend to think things out. But for some reason in markets, guys tend to be very emotional. Now, here on this channel, about 90% of viewers are male, okay? 92% or so, 8% are female. Females tend to be better investors than males. They tend to be less emotional in markets. It's the wildest thing. But for whatever reason, guys tend to be very emotional in markets. So here's the exercise. Sit back, think about what has changed. Okay, think about the last month. What has changed? What has actually changed? The Fed? Yeah, kind of. Okay. The Fed went from like projecting, 3 cuts next year down to 1 to 2 cuts. Yes, that changed a little bit as far as the path of cuts, but the growth expectations went higher. So would you rather have more cuts and lower growth or faster growth and less cuts? Most people are going to take faster growth and less cuts any day of the week. So did something change? Yes. Did it change for the negative? I would say not really. I would say net, you're kind of equaled out here. Okay. Less cuts, faster growth. Big disappointment. Okay. That's sarcastic, right? So when I truly sit back and think, we haven't had earnings, we haven't had any economic data that really changed anything since the Fed, right? Besides the Fed's dot plot changing, which again really just equals out, nothing has changed in the last 2 weeks or so. Just tax loss harvesting, some profit taking, pretty normal things overall. And I think it's more, extreme this year because the gains have been larger, the gains have been more concentrated this year, and the losses have been wider. So instead of seeing just a small area of tax loss harvesting, there's a large area of tax loss harvesting because, it's been a pretty narrow market in the entirety of 2024, and the gains, most of them are really in big tech. Okay, so nothing really changed. And that's from a non-emotional perspective. Now, you can get emotional. You could say Trump's inauguration, tariffs are going to be terrible, and inflation's going to skyrocket. We don't know that. And markets, they're not getting ahead of that at this point. Tariffs, that's a good argument. Okay, maybe the markets do get fearful of tariffs at some point, but I don't think that is what is affecting markets right now. And again, the percent of stocks trading above their 50-day moving average is at 32.88%. That means what? Almost 69% of our markets are in a pretty severe downtrend. If you're in a bull market like we are, nothing changed from that perspective. This has always been a good buying opportunity. Question is this time different? And what has changed? I don't think anything has changed. It doesn't, again, in that exercise, when I sit back and think, did anything change? No. So when markets are this fearful, you need to be buying. Okay, as Warren Buffett says, the stock market is the only sale in town where people do not line up. Okay, they don't. They run away. It's because of emotions. You have to take the emotions out of it. What you really want to be thinking about, especially tonight and throughout the course of the day, tomorrow when markets are closed, is where do you want to be positioned? Where and what areas are going to benefit the most in 2025? Where is the most upside? And I think it's in some of the depressed areas of our markets today. I don't think it's big tech. I think AI appliers is really where you want to be. I like MongoDB. I like Snowflake. I like Elastic. I like, obviously, Tesla. I think Tesla's number one. I think like a MongoDB could be like number two. I think even like a Novartis semiconductor for a super high risk, high reward kind of play could be interesting. Again, Elastic's in there. There's other names, right? Applied Digital data centers, I think, are going to do really good next year. Those are some of the ones that I personally own for the AI appliers of next year. I think they're going to do very well. All of those stocks that I listed, I think they're going to be much higher by the end of 2025 than they are today. Okay, at least doubles, if not more, in my personal opinion. Again, not financial advice. That's where I am positioning my portfolio. I also like small caps. You got to be a little selective because some companies are just bad. Okay, I like cyclicals. I like value. I like your dividend payers right now. Okay, those areas I think are going to do really well if inflation comes down, more than expected, or if tariffs are not as bad as expected, right? If tariffs are not as bad as expected, Dollar General is going to rocket. Target's going to do well. Nike's going to do well. Okay, some of those areas, some American kind of Chinese plays would be a good place to be as well. I like those on a risk to reward basis since they've already fallen a lot. Now, again, kind of just to point out the fear again in markets, CNN Fear and Greed Index is at 29. It's almost an extreme fear. I don't give a rat's ass what is going on. When CNN's Fear and Greed Index gets close to or into extreme fear, you want to be buying the shit out of markets. That's the bottom line. Okay, we're there. Let's face it, we're there. Again, 30% of stocks trading above their 50-day moving average, almost 70% of stocks in an extreme downtrend. I don't give a rat's ass. You want to be buying this. In a bull market, of course. And last I checked, we're still in a bull market. Now, Tesla is just going to benefit more than the average stock. That's it. Okay. I think, generally speaking, markets are going to do well. You're going to see a bit of a rebound here in January that could be pronounced coming Thursday and Friday. You could see a real, bounce back in markets, and it's only going to benefit Tesla more, right, than the average stock. Now, if Tesla deliveries come in really good, then Thursday and Friday could be epic days for Tesla stock. If deliveries are not as good, then it could be a worse day. But I think you're set up in a really good position for Tesla's delivery number on Thursday. You've fallen $80 from the high. I like how we're set up. I don't exactly like the charts, and I don't exactly like how the end of the trading day transpired today. But until we get that delivery number on Thursday, it's not a guarantee that we're gonna crash from here. It's not a guarantee that we rally either. We really need to know what that delivery number looks like before we draw any larger conclusions. So, ladies and gentlemen, let me know what you think about this information, about the areas that you're bullish on for next year. Again, my number one is AI appliers. It's not semiconductors. Select semiconductors, perhaps like a Novartis semiconductor, which they really do like energy efficient semiconductors, right? Like in fast chargers, stuff like that. Those are some, that's an idea, but obviously high risk, high reward. Tesla, number one on the list. Elastic, MongoDB, right? Snowflake. These are some other ideas as well for next year that I really like. So let me know what you guys think down below in the comment section. Have a fantastic rest of your day. This is the last video until 2025, which is tomorrow. So pretty crazy that we're heading into a new year together. Nonetheless, have a great rest of your day. Welcome to 2025, and I will see you in the next one.